Well, g'day everyone. Liam Garman here, editor of Smart Property Investment, back today with another live stream for Property Buzz, where we unpack everything that's going on in the property market and what you need to know. And I'm joined remotely by a man who just describes himself. He's a humble tech salesman, Phil Tarrant, all the way in the land of the long white cloud in New Zealand. Phil, how you going?
Hello, Liam. How you going, mate? You all?
Well. And this week it's been diving straight in. It seems like it's a bit of a confusing week in the world of property. There's been a few changes. We've now the rumor used to be that we're going to be dropping the 50% discount on capital gains tax to 33. Now the rumor, according to the Commonwealth Bank, their chief economist, the rumor is now we're going back to indexation. And the rumour from the CBA as well is the idea that we were going to cap negative gearing to 2 properties is gone. And we might be just slashing negative gearing full stop. Phil, what are we making of it?
Well, I must admit I've been a bit disconnected the last few days.
Are you just hearing about this for the first time? Am I the bearer of bad news for you?
And mate, it's one of those things that I'm sort of conscious also. I don't want to be in the business of speculation, but we've been speculating a bit and trying to just cover what are rumours and, furphies potentially going around. Everyone's got a view and opinion on what the government may do at budget time. We've been sort of discussing or giving some context to some of the different proposals that we see banded around. No one knows. They've kept it pretty tight. I know the Prime Minister was speaking this week. I think it was over in Perth, was he? And in a run-up to that, it looked as though he was going to give some indicators around it. Did you get across his speech? Was there anything coming out of that gave some conclusion indications what may happen?
Look, I don't think at the moment, as you highlighted, it's all speculation. It's all speculation. So the CBA chief economist, they did an interview with, I think it was the Telegraph or the AFR, maybe one of the News Corp papers. I can't really remember. Maybe even the Oz. I think I've just listed every newspaper in the country. But where they broke down essentially saying that now the going theory is behind the scenes that we're going back to an era of indexation as opposed to the 33% discount, and that negative gearing is just going to be scrapped to zero. So I don't think that there's any clear indication as of yet, although we're only a few weeks away. And at the end of the day, I think that this is too big of an announcement for the government not to pre-brief journalists to get it out into the market. You run the risk of a fire sale if you start making too radical of a change overnight. But what this has done, Phil, and this is where investors really need to keep cool, calm heads. What we're seeing is that house prices across Australia are still quite resilient. They're still growing. And one of the reasons for this, Phil, and there's been some data coming out this week, in particular with listings. Now, we're not in an environment where the economy is so rocked to its core and people are so unable to buy and investors are so concerned that listings are increasing. What we've actually seen is that listings are, well, arguably they're decreasing because sellers are nervous. Now, it's an interesting point that if sellers are nervous because they're not necessarily confident that they're going to get their high prices or the prices that they were expecting, so therefore they're not listing or they're not accepting lower offers, what we're actually seeing is that the expectation of sellers is remaining quite high. We're not in an economy where people are forced to sell, and that's the big thing. We're not facing a push-led fire sale of homes. People are just happy not to sell at all, which goes back to what you and I were talking about months and months ago, when we first started musing on capital gains, which is, well, people won't necessarily sell at all. And if 50% of properties in Australia are positively geared, then people will just hold for the long term. So the current data, Phil, is that buyers are looking for a bargain. There are some bargains. There's been less than a single percent price drop, but only in Sydney and Melbourne. Everywhere else is quite performing quite well, especially Perth and Brisbane still. Darwin and Adelaide as well performing quite high. Sydney, Melbourne, the only ones going back less than 1%, which is well within the margin of error. That not unsurprising given that in the last 31 days, we've had three different public holidays. So you have fewer auctions, people holding off selling at auction as well. So, Phil, it's one of those things. I almost think there's nothing to see here, and people need to keep a cool head, because at the end of the day, sellers have to come to the party, and if sellers don't want to come to the party because they're not willing to negotiate prices down, then there's no prices, there's no houses to buy at a discount.
Well, that's you know, everyone wants to get a bargain when they're buying real estate. No one really gets a bargain when they're buying real estate. They're buying at market value. That's fundamentally the way it works. Every now and then, for some reason, you might identify something which is under market value, and you capture it, but the likelihood of that is low. We spoke about this at length when all these sort of things started being mused around that. You're just going to take liquidity out of the market. You're going to have less transactions as a result of any changes, particularly to all those properties that are positively geared. People don't need to sell. People only need to sell if they think they're going to redeploy the cash somewhere else, or there's some sort of distress measure. And there are households in Australia which are distressed, but it's not most households. It's some households, and particularly those people who invest in property. If they've got the basic fundamentals right, they if they're not forced to sell, they'll hold on. And this is what's going to happen. In terms of musings for what's going to happen in less than 2 weeks' time. I saw that piece around indexation, or pretty much saying, rather than grandfathering the 50% CGT, they may revert back to sort of post 1999 rules and indexations, where you will be taxed, assuming that those rules were still in place. So you'll still be a discount to some degree. They tried to simplify the capital gains tax regime by just applying a 50% discount on all. But often, if you apply the old regime, you might be behind the game. If you apply that regime, you might be ahead of the game. But it's going to be very complicated, irrespective of what the government chooses to do. And unfortunately, it's going to be our poor accountants on the front line as the salespeople to implement this and actually articulate it. On one hand, you've got the government applying a reasonable sort of posture, in that all they're trying to do is win the favors of younger voters. So all they'll hear is that wealthy people are going to be taxed more, and it's going to be easier for them to enter the housing market because housing affordability is going to be cheaper. That's the headline message. And on one hand, that's easy to understand, but once you get into the details and minutiae of what these tax changes will be, no one's really going to be able to understand it, and that's going to be lost in translation. It's irrelevant, and you get these headlines also around, maybe you can only negatively gear 2 properties. Well, that's most property investors in Australia have 2 or less properties, right? Like 90-something% of all property investors have that. So, when you think about how many people it will affect, the fact that you can only negatively gear 2 property, once you start getting more sophisticated investors with more than 2 properties, they typically have their assets sitting in other vehicles, whether trust or company structures, right? So negative gearing is irrelevant in those structures as well. So at a headline level, saying, we're going to minimize negative gearing to 2 properties, well, that's most of the market. And I'd like to actually see some genuine treasury modeling, or someone to model what the actual impact will be on increasing tax receipts on those people that have 2 or more properties in their personal name, let's remember, and then the ramifications of disincentivizing property investment in Australia, and all those positively geared properties. You've got to pay tax on that, so that may dry up. So it's hugely complicated. I look forward to try and unravel it all and dissecting it, and actually giving our listeners and viewers a sense for how it's all going to work, because at the moment it's all up in the air and I don't know.
There was I did a fantastic podcast the other day with buyers agents from Lever, and they gave a really good insight, and it goes back to the talking point that you and I often discuss, Phil, which is the cost of construction. Now, what this buyer's agent is doing is, the logic is, now he's moved very much into the unit market, seeing it as a very low barrier to entry asset, which you can acquire more of, but has an extremely high replacement cost. So he was giving the example on the podcast that he will go to St Kilda, so a very in-demand area in Melbourne, getting units in the sub 500K range. And he said that the real interesting hook here is the like for like square meterage build to replace these units in the sub 500K range is now nearly $900,000 when you add in all the taxes and all the levies that you have in Victoria. So there's a huge gap here. There's a huge gap that something which is established is 500 and the replacement cost is 900. Now, it's something that you and I have unpacked in the past, but regardless of if you keep the discount and negative gearing for new builds, grandfathering, removing any grandfathering rocks the investment fundamentals of our nation right to its core. Because at that point, I know you've been very vocal on this, Phil, at that point, the level of trust is lost in the government that, well, we had an agreement, I bought this under the agreement, and now you're changing it. If you do that, now 50%, and there's that term thrown around where it's, if you attack investors, you will decrease supply. And it's true. It's true. Now, a lot of our listeners might buy established homes and they might have never actually bought an off-the-plan property, but over 50% or around 50% of new builds and off-the-plan properties are built by investors. A lot of people that build duplexes, I would say a very high percentage of people that build duplexes are investors, or they want to be investors because they're splitting a title in two and they're looking to build on it, which is, at the end of the day, an investment. If you do that and you reduce supply by up to 50% because you undermined the trust that investors have in their government, well, prices are going to go up regardless. And this is something that a lot of people are going to have to grapple with. And you're right, there's an argument here that it's headline grabbing because it makes people feel good. My projection is, with all the costs that are going up, supply is going to grind to a halt in a way that it's never ground to a halt before in Australia. That means people are going to end up paying more in the long run. The government just gets a bigger slice of the pie. Investors will lose money. Renters will lose money. Government coffers will be full because we need to pay for the NDIS and all these fantastic programs that have blown out. But people aren't necessarily going to be better off, Phil. And it's quite sad at the end of the day that we're at this level. And of course, the government, and I should have said this before, I was reading in the AFR, now the government is looking to drop the discounts on shares and equities as well, which I find such an utterly gobsmacking notion, because it's one thing to have a feel-good reduction of a tax discount on homes, because you've got that feel-good argument that everyone needs a roof over their head. I feel like there's the economic shock, the economic waves that this is going to have through our financial system by taxing share trading more as well, which at the end of the day, you're going to see a lot of people whose superannuation funds are going to get a lot smaller, not because they're getting tax discounts through super. You're basically between 0 and 15% super anyway, but because now there is no incentive for you to put money into investing. And I don't even blame young people anymore. If you don't have enough money left over at the end of the day, if you look at it, you're like, well, now the amount of tax I'm going to be paying is essentially doubling. And of course, you're the one carrying the risk. You also lose when it goes down, and you lose when you win now. I don't blame young people if they look at this and say, well, I'm going to just go to Greece for a few weeks because, what's the point? Because the government's just going to take my money anyway, and I'm just bearing all the risk if it goes south.
Well, there's a lot of people thinking that way at the moment, Liam, and I have grave concerns about how large our public service government workers are getting in Australia. It's, we are leading the world in a number of public sector workers or government workers over the percentage of the population. It's hugely blown out under this current government. And we know from history that big government in Australia isn't necessarily the right architecture we have. But, frustratingly, we're sitting here talking really in the weeds of, how does the government change the tax regime in order to boost its coffers in order to pay for bigger government with bigger spending, right? And it sort of leads me to this. You'd be familiar with this, the maxim of Sun Tzu, which is tactics without strategy is the noise before defeat.
Mm.
And we're certainly there right now. And what that sort of lends it to, and this is for our listeners that might not sort of be connected with Sun Tzu, but it's well regarded in terms of doctrinal development and strategy, etc. But we're so busy at the tactical level. The government is so busy at the tactical level. It's doing so without a clear strategy. And if the taxation um, regime changes and you'll hear this coming out in the budget in a couple of weeks' time. You're going to hear about generational inequality or generational equity. You're going to be hearing about productivity and fixing productivity. We have a huge productivity crisis in Australia, and what we have is a private sector that's doing all the heavy lifting, taking all the risk in order to um, uh, pay for the spending of the government and large spending. Now, they're really taking the shine off giving Australians the entrepreneurial flair and the spirit to go out there and create business to employ Australians and to raise money. Like that's on one hand, that's a big issue and it's a big problem, and it's going to stifle the nation because if we don't have a vibrant private sector, no one's going to be able to make the profits in order to pay the government for all their large spending. That's on one side. You're disincentivizing that, but on the other hand, disincentivizing property investment, which is to your point, contingent or intrinsically um, um, factored into the overall health of the nation. So, this idea of deploying these tactics without really a clear strategy is really, and you'll read this if you go and look at it, is the slowest way to any sort of victory. And I don't know what victory or what success actually means to this current government. And they haven't really been clear in outlining that. All they're doing is a whole bunch of noise, and maybe the strategy is just to ensure that the voter base keep voting for them. I imagine that would be their strategy. But that's very sort of binary in that the government just wants to stay in power. So what do they need to say or do in order to achieve that? If that's your objective as a governing body, it's just to stay in power, that's not really supportive of an overall agenda for supporting the growth and development of Australia for all Australians. So, but that's where they are, unfortunately. And tactically, they're trying to mess with property taxes in order to achieve that objective. That is to stay in power, to everyone's detriment. And I'm seeing, and you're seeing it now, a nation that actually wants change in government. Unfortunately, the coalition is not there to develop it and deliver it to them at the moment. One nation seems to be the flavour now. So you can just need to look at those numbers that you do have this cohort of Australians with these more liberal orientated ideas who are rather than Labor, I'm talking about, but they're flocking to one nation rather than the coalition at the moment. So work needs to be done there. But who want
Well,
change? I
who
just
knows?
don't think structurally we can have it.
Maybe some of these teal seats, which are usually quite well off, maybe this will tilt them back to the coalition, tilt them back to the Libs if they're in a
What
position
do they say?
to.
If you vote teal, you vote green. Is you know what the opposition leaders sort of
Well, I mean, the Teals do vote with the Greens about 90% of the time. It's a reasonable argument, but maybe it's enough to tilt them back. But you and I, during the week, we were musing about where this is going to leave investors and what the next steps are from here, because everything that we've unpacked, Phil, there's a lack of trust that people have in the government, and that's a very reasonable thing. But at the same time, the data is clear that, well, there's still demand there. And when you look at the Perth market, for example, and the days on market are still single digits, right? It's still 60+% owner occupiers that are buying. People aren't necessarily spooked by the interest rate rises. People aren't necessarily spooked by the risk of tinkering with the property market. People still need a place to live. So where does this leave us? Even over April, most of the capital cities right across the country still experience positive growth, despite everything that's going on. And also, of course, despite people having lower serviceability after 2 or 3 rate rises already, you simply can't borrow as much as you used to be able, and yet prices are still going. So it's still an incredibly liquid market that we're in, but you and I have been musing over the last few weeks about it. Almost goes back to the basics of property investing, and in particular with manufactured growth. And I totally agree. I think that we're looking at a renaissance of flipping. I think we're going to be looking at a renaissance of glow-ups. I think glow-ups are probably the best way to put it, because it's not necessarily an entire renovation. It's a lot of stuff that you could do yourself, changing fittings, painting, gardening, a general glow-up. I think we're going to be looking... I think we're going to go back to the basics in the sense that you can't expect that the market will quote unquote do the heavy lifting, and that heavy lifting being 15, 20% annual returns year on year on year. You have to pick the right asset. You have to pick the right asset that can be fixed up. You have to look for something that makes a place unique, whether it's slightly bigger land size for the granny or the extra bedroom that can be put in, the extension. Now, this isn't necessarily a whole entire renovation, because whole entire renovations are extremely, extremely cost intensive and can go wrong more often than not. But being more considered in your purchasing rather than just plucking something and expecting that'll do well. Firstly, I think that's the case. Secondly, and this is something that you and I were talking about last week, I think a lot of buyer's agents will be found out because we can't rely on the market to do the heavy lifting anymore. And a lot of those strategies where it was essentially you get 20% year-on-year return so you can just strip equity and buy more, I think that's done. I in my opinion, I think that's over, because if you look at the new markets, and we were talking about this last week, but it's very worth stressing. If you look at a lot of the markets that buyers agents are buying in, and you've got sub 4% yields on these houses, no one can actually afford, even if they grow, even if the equity grows in these places, you actually won't be able to afford them if you take out 50 to 100K. You know, at the end of the day, you'll be quote unquote negatively geared 50. Oh, can you hear me? So I think I just lost my audio. You'll be negatively geared $2,000, $3,000, $4,000 at the end of the month, which is a holding cost a lot of regular Aussies can't afford. So with that as a background, with the new kind of financial influencing that we've been conditioned to, with those sugar rushes that we've been conditioned to as property investors, I think we're going to be going back to the basics, which is that manufactured growth.
Yeah, absolutely. We spoke about that last week, and we're going to see that as a trend moving forward, which means, the assets you choose may be different. You're going to be looking, and one of the key skills is going to be able to identify what value looks like in a new market. If you're going to go down that pathway, you need to be a lot more knowledgeable of markets and the type of properties in markets, rather than just wait for the market to do the lifting. So, value is going to be sitting in renovations and improvements. Splitting rooms, building getting an extra bedroom in there, maybe en suites or upgrades. So we don't need to go too far into that, but it'll be a theme moving forward. But back to the point around productivity and big government, that would be my beef of the week. It's probably my ongoing beef, but I've just been spending quite a lot of time just this week musing about those type of things, and it's certainly something that's clear and present. A strategy of a government to remain in government, irrespective of the costs. I don't think that's the sort of Australia that most Australians want to be living in. So we'll find out what happens there, Liam. But what's your hot take? Got a hot take for me this week?
And you know what? My hot take, I took the words out of my own mouth, because my hot take was, where were we going? It was, sellers have to sell, and this is where we started the live stream, right? Which is, I was going through Domain this week, and there was a headline that took my interest, and it was very small, but I think it was.
What's on your tablet there? So you should be bringing it up on your new.
Oh, I can do that, can't I?
Tablet, yeah.
That's
it is.
Website's all zoomed out at the moment.
Oh, that's all right. Well, I'll have a go. Where is it?
To all out the team watching, there's going to be a lot more interactive moving forward. We're just trialing some new tech to be more engaged. Any questions coming through?
Do we have any questions
on the social waves?
Well, I'm about to do some cool stuff. Okay, so
Remember, you got to bring up the tablet view.
It's how we like to do things here, just sort of
on the fly.
Yeah.
Okay. Distressed.
This live.
I'm teaching myself tech. Distressed listings. You can get a bit of a flavour of what I'm about to talk about.
That looks quite hard there with your little pen.
Well, you can't use your finger, can you? You can't like
No,
you can't do these
it's
ones.
designed to be like that because you don't want to accidentally press a button.
Well, that makes sense. Well, there we go. Okay, cool. So, tablet. Let's see if this one works. Wait, no.
There you go.
There we go. Okay, cool. So, Australia's housing market, distressed listings near record lows, but economists warn cracks are emerging. And Phil, this is the headline that got me thinking. And it's where I started the podcast, which is sellers have to come to the party to sell at the end of the day. Now, we always get the warning signs. There's always the clickbaity headlines. You go into the Daily Mail and it'll be something like, economist warns that 30% house price decrease, blah, 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 blah. But this, at the end of the day, shows that very few Australians are in a position where they are forced to sell through economic detriment. Very few Australians are performing so badly that they're forced to sell. Now, a lot of listings are dropping because a lot of sellers are like, hey, actually, I don't even want to tempt a haircut. I don't want to tempt a haircut at all. What I'm going to do is I'm going to wait for greener pastures. And in waiting for greener pastures, they're not selling. And because they're not selling, prices are going up. So, Phil, that's my hot take of the week is don't lose your cool, because at the end of the day, you're the one that chooses to sell. No one can force you to sell. Well, not yet anyway, not until maybe the next Labor government. But no one can force you to sell, and greener pastures is always on the horizon. We said there's still like 60% of the market is PPOR demand. Well, we know that because about 60% of new loans are being written for PPORs. Now, of that investor pool of about 40 to 44%, a lot of them are also rent investors, because if you're in Sydney or Brisbane now, it's very unlikely that you're buying your first home in the city that you live. Brisbane's now the market which is the hardest for first home buyers. And why is that? Because there's no supply of units. Whereas in Sydney and Melbourne, if you're a young Australian, you can go into a unit. You don't have that option in swathes of Brisbane. So the entry levels in Brisbane for young people are far, far higher. So what does this mean? They're rent investing. They're going out, they're buying elsewhere, they're buying homes as a store of value. So even in my opinion, Phil, that 40 to 44% of loans that are being written that are for investors, a fair chunk of them are also people that, it's commensurate to a PPOR if you have one rent vested property. So at the end of the day, the market is strong. Despite what the headlines say, despite having already weathered 2 to 3 interest rate rises, having weathered what is now 5% inflation, you're the one that chooses to sell. And because a lot of people are choosing not to sell, it's exactly what you and I, Phil, said months ago, that people will just hold, and people will hold ad infinitum. People will hand it down to their children. People will have succession strategies to hold on to their properties, which would lead to higher house prices. Well, because people aren't losing their jobs hand over fist like people are expecting, hey, people aren't willing to part with their asset. And that's my hot take of the week, because as distressed listings near record lows, there's still always a rainbow in the horizon for Australia's real estate market.
Are you still got your article up on the screen? I can't see it. Is it back to you?
It's back to me, Phil, but I can get it back.
Yeah, there you go. That's all right, it's fine. So yeah, just as you were talking there, I was just thinking about that Sun Tzu quote that I was able to pluck out somehow buried deep in my mind around this intersection between tactics and strategy. And a lot of you would have heard of the Art of War, which is a great sort of classic in relation to strategy. And I just quickly Googled it, and so there's a bit of fun here, maybe for the first time ever. What reading the Art of War or some of the more famous quotes from Sun Tzu or theories from Sun Tzu, and how does it apply to property? So I've got 5 quotes here, which you may know them, you may not them, but let's have some fun and look at this with a view of how it can actually use sort of strategic doctrine in property investment. It's really good. First one here, Liam: move only if there is a real advantage to be gained. And what you're talking about there is exactly around whether or not you sell or not. Why would you sell a property unless there is a real advantage in selling that property? And this is going to be certainly one of the contextual consequences of any change to the tax regime, is that you're just removing an advantage for people by selling a property. If you're going to be slugged tax bills, and I'm hearing things around potentially even, that tax being paid on a capital gains over multiple tax years rather than one, right? But move only if there's a real advantage to be gained. That's when they're buying and selling property. Another quote here, which is really good: "Regard your soldiers as your children, and they will follow you into the deepest valleys." There's certainly a property investment orientation around that, and you've got to just be thinking about regard your tenants, um, uh, and be highly connected with your tenants, because if your tenants are looked after and you provide a property which is conducive to their happiness and long term and longevity, and they're paying their rent, that's the absolute critical aspect of property investment. So a lot of investors often overlook really being a solid provider of rental accommodation to their tenants. So think about that. There's another quote here: "There is no instance of a nation benefiting from prolonged war." Now, put that in the context of property investment. That is holding on to a property investment portfolio, irrespective or despite all the problems or challenges to it. Often you need to maybe take one on the chin, or take a bit of a haircut if you're holding on to assets which aren't performing. So holding on, irrespective of all the forces that are facing you, there's no benefit in that. So it's about being decisive and taking your action. There's another one here, Liam: "Build your opponent a golden bridge to retreat across." And that there is certainly connected with every single property investor. You always need an out. And an out as a property investor, you never know what's ahead. You need to make sure that the assets you buy today are going to have currency for tomorrow to someone else. So buying investment properties which are hard to sell, or have hairs on them, or a unique in a particular way, which is a negative rather than a positive, i.e. very difficult to sell in any market, that's your golden bridge that you need to create for your property investment portfolio. You always need it out, so make sure you build your property portfolio correctly. So there you go. There's a bit of connectivity
I couldn't agree. That last one is that last one's fantastic, and it's always important. And this is not even just property investing. This is life. When I used to work in politics, you always had to give your opposition an off ramp. You have to let them exit strategically, and you see that. You see it in geopolitics, where it's you're at war with a foreign nation, and you have to give their nation an off ramp to gracefully lose, because when you're painted into a corner, that's when people go particularly feral. And if you've got nothing to lose, quite like Iran at the moment, right? If you've got nothing to lose, then you're going to keep lobbing those drones. You're going to keep lobbing those missiles. In the property context, this is why it's almost bewildering that we're not even considering grandfathering CGT, because at that point, then you'll just hold forever. You actually want people to exit. You're only going to decrease house prices if listings go up, and listings ain't going up. Now, even though the market is now looking at this, like smart property investors, Phil, if you're looking at the market now and you're like, oh, there's a risk that they might not even grandfather CGT, but I'm still holding on. Listings are just going to drop, which means prices go up. But I've already laboured that point. Hey, Phil, what we were talking about before, in terms of there not being a real credible alternative, in terms of, the libs are, I think it's very fair to say, I don't think this is a controversial thing. I don't see them really anywhere. They're not. And this isn't, criticism. I very rarely watch the nightly news, but if I catch a glimpse of it, I don't really see the libs. I don't really see them out there giving their policies. My wife was watching this, what's that show where they poll people? You got the 100 people, and they've got all their squares. Do you know the one? Anyway, my wife was watching it, and I was just catching a glimpse of it the other night. And Albo was on there, and he seems like quite a personable guy. I'm like, he was actually cracking a few jokes. It's quite funny. But to your point, One Nation seems to be coming through. So I Googled, what's One Nation's housing policy? Because I don't think I've ever heard of it. I didn't even know if they had a housing policy, to be honest. It's actually quite interesting. So they start off with, since the COVID-19 pandemic, timber costs have gone up more than 200%. Electrical materials have gone up almost 200%. And this is in terms of cost of raw materials. And plumbing materials and fixtures have increased by about 100% since COVID-19. So their solution is a 5-year GST moratorium on building materials used in new homes with a value of up to $1 million. So notionally, everything that goes into that house will be now 10% cheaper. That's quite good. A review of excessive government charges that make up 44% of the cost of new homes. That's reasonable. And I didn't know
that's
this.
the point, right? Like, because there's so much of the cost of a new build property it goes to government levies, like the infrastructure fund. Like you're paying all that money to the coffers to build roads and put sewage in, and like that's not paid for by the state government. It's paid for by the developers, which is passed on to the buyer. So yeah, it's not a bad idea.
And this one, and I didn't know this, and I Googled it afterwards, but removing mandatory disability compliance requirements for all new homes, allowing Australians to choose their home designs without unnecessary cost burdens. Phil, did you know this?
No.
So I Googled it. Now, the mandatory disability compliance for new homes in Australia. Now, this is a Gemini AI overview, so we'll take it with a pinch of salt, but it seems probably more or less correct. Under the National Construction Code of 2022, requires compliance with the ABCB standard for livable housing design. Now, what this means is new builds need to have step-free access, wider doors and hallways, reinforced bathroom walls for future grab rails, and a ground floor toilet. Now, notionally not a huge problem, but yeah, I can see how that adds quite a demand if you're looking to design and build your own home. That these seem especially step-free access downstairs. That seems like it can be quite limiting.
This is building this contingency or contingent capability in every single house, and most people will go, like, if people have disabilities, they need fit for purpose housing, right? That doesn't mean every single house in Australia needs to be orientated that way. It sort of makes sense that, there'd be outliers to it, but, removing unnecessary red tape needs to happen across the whole of the government bureaucratic ecosystem. It's they pay lip service to moving through and speeding through approvals for housing. The New South Wales government put this pattern book together. I think no one's using it, is what I'm hearing. As people just going, whatever. Like it hasn't really hit the mark. So there's still this onerous process in order to get any development done. And look, yes, there needs to be building standards and oversight around the quality of buildings, and we've seen some horrible issues overseas that have cost lives in buildings not being built correctly with the right material, and we see often that the quality of building standards isn't met here in Australia. So there needs to be standards, absolutely, but sometimes it just needs to be a bit of common sense applied to it all. But I wasn't really familiar with One Nation's housing policy.
I didn't even know they had one, to be honest. That's why I Googled it then.
Well, this thing with One Nation, most people go, I don't really know what the policies are, but they seem to be saying, a lot of things that's resonating with Australians. The issue you have is that, it's a replacement for as we were chatting about, those voters who have always been coalition voters are just moving that way because they're not getting what they want and need on their sort of traditional voting agenda. So anyway, we'll see what happens. But again, Liam, are you going to move to our
I'm going to get up our video.
Here we go.
Okay.
Actually, in regards to that, I sent the video to Phil via Gmail chat.
Yep.
So he can bring it up on his phone and watch it. And then that way, viewers can watch it, Phil can watch it. All at the same time.
Phil, did you hear our amazing producer, Jacob?
Yeah, it's sort of
cool. He sent it to you so we can watch it at the same time.
Yeah, just on Gmail chat.
On Gmail chat.
I don't have my phone on me.
He doesn't have his phone on him.
I do, but I'm not logged in. That's right. I can listen. You can show me on your phone.
Will it work?
It won't work. He won't be able to see it on the tablet. You can play it for the audience here, but you might need to play it through your phone so you can hear.
Oh, well, that's going to make a double noise, isn't it?
So what we might need to do is just play it through the phone.
Yep.
For Phil to hear it.
Okay.
What I'll do, I'll zoom in with the camera onto your phone so then the audience can see it.
Okay, we'll do that. Where did you send it through to? Sorry, did you send it to me?
Yeah, it's on Gmail chat.
Oh, hang on. No, I do. So I actually have this Google chat. I found it.
Oh, he's
on
got
my
it.
phone, which I do have.
So you've got your,
Yeah,
so you can listen
I've
to it
got
on
it.
your
I
own, Phil?
did. It's over here.
Okay, cool. Well,
All right.
nice.
But if, yeah.
I'll press go.
So do I watch it at the same time?
You can watch it at the same time.
Okay.
Now, check it later. Financial freedom doesn't come overnight. Just last year, I was living in a wasp's nest, had no money to my name. Today, I'm buying my own private island. And if you want to know how I did it, make sure you comment in the comments so I can comment on your comment with a comment about how you can join my live webinar, which runs 24 hours a day, every day, even on Christmas Day, because Jesus wants you to get rich. They're going to say that no money down property is a scam. Let them, because whilst they're struggling to pay off their mortgage, you'll have over 100 free properties which will pay the mortgages on your mortgages. So we'll see who laughs last. Loser is a loser, but you don't have to be. And if you want to stop being a pathetic little worm and move on from the sad, miserable existence that you call life, comment I'm a schmuck, I'll give you VIP access.
Okay. That's good to see a bit of satire coming into
Bit of satire. That's where we're changing
the
it up.
property investment game.
You know what? And I think it's pretty reasonable. You know, you've heard so many people out there, and a lot of vulnerable Aussies, right? A lot of vulnerable Aussies that are being guaranteed things by buyers agents. And, you know, Phil, you and I talk about this very often. I don't think we necessarily need to double down again and kick some people. But I think it's super reasonable. So I remember a few months ago, and this is something we haven't discussed yet, but actually maybe about a year ago, there's a large, I've got to pick my words carefully here, a large off-the-plan development and sales company. And they sent out an email saying that they're launching a new buyer's service. I think they avoid using the term buyer's agency or advocacy, but a new buyer service. And I thought this really interesting because, in my opinion, I thought, well, you're such a big multi-billion-dollar company, you'd actually have access to quite good data. And in terms of the very old adage of you don't want to buy in areas where there's a whole heap of new supply, well, who better to know about that than the people building it?
Yeah.
And I reached out to them and I said to them, oh, so you would have your real estate license then? And they were like, well, no, we're not selling agents. I'm like, well, I didn't ask if you're selling agents. So I said, you know, do you have your real estate license, which you need to be a buyer's agent? And it turns out we went down this little rabbit hole that their buyer's service was only giving them access to properties that they had built or their that related companies had built. So they were going out to Australians who might have heard about this great thing called real estate but have never dipped their toe in before. Aussies who have spent months and years saving to get on the property ladder. And companies like this have come out saying, we know the best, we have the best investment strategy, and we will give you advice where you should be buying. But it's not that they're going across the country and finding these quote-unquote hotspots. It's not that they're going across the country and finding fair and reasonable valued established homes. No, the only homes that they would ever show or ever present to you are homes that they themselves built or related companies built. Now, the challenge here, Phil, is that when you're buying these off-the-plan properties and you have people selling them to you, it's very common that they bake in a commission. Now, some of these commissions can be up to $50,000. Now, if someone gets a commission of $50,000 for selling a home to you, it is reasonable for you to think that maybe that $50,000 is baked into the price of that home. And if you go and sell it anytime soon, you'll probably be selling it for about $50,000 less. And the proof's in the pudding, because if it was going to sell itself, if it was such a good property, if it was so well valued, they just chuck it up online and someone will come along and buy it anyway. They don't need someone who's going to get a $50,000 commission to sell it to you, especially through these avenues where they pretend they're doing it in the buyer's interest. And there are people throughout the buyer's agency industry that are getting a clip of the ticket on both sides. Now, these weren't buyer's agents because by their own admission, they didn't have a real estate license.
Yeah.
But people are getting a clip of the ticket on both sides. And like this video, and I know I've gone down a little bit of a rabbit hole, but there are so many people that are selling these ideas and making Aussies feel bad because they might not be investing in property and calling them fools and showing off their flaunt and flaunting their wealth. But you've got to be careful because most of the time, like we saw with this buyer service, Phil, it's full of it.
Oh, yeah. You know, it's a whole thing in its own. The undisclosed commissions and kickbacks that take place across property. Now, you know, I'm a big proponent of disclosure, and you got to be practical and realistic. Often where you've got interconnected services and referrals, there will be, you know, sometimes a commercial arrangement between different service providers, and there's nothing wrong with that per se, but it absolutely needs to be disclosed. So the buyer, the consumer actually knows what's happening. It's when it's not disclosed that I've got big issues with, and that's where people sort of can go wrong. Look, project markers that have always been around, you know, flogging properties. It's not a new thing. It won't be, you know, to happen into the future as well. Fortunately, now I would like to think that investors are a lot more informed than what they were once upon a time prior, where the only way really to get information was to go to seminars, and those seminars were typically just a wrapped up sort of sales pitch where you'd rush to the back of the room to sign up today to either buy a course around property and or buy a property. So people are more informed, but unfortunately people still do come unstuck and undone. That particular video I find quite interesting because it's a relatively new thing, but you know, it's a couple of years now, but property investment advice has become like a bit of an internet meme now, where there's this playbook of like, you know, be offshore somewhere, show them a beautiful life, you know, have nice cars, have nice holidays, have nice clothes, you know, tell people about sort of changing their lives for the better and how property will be able to do it. It's become a thing. And it is now, like I'll call it out like that there, you know, satire or as a meme, right? Where, you know, it's as bad as, you know, I think most people on social media that make money are people who are selling coaching courses to either other coaches or to people who are looking for, you know, some silver bullet to change their lives. And certainly property investment falls into that. You know, it's not like the tactical strategic application of purchasing investments for long-term creation. It's about how you can change your life through property. You can be like me. You can be wealthy like me. You can have everything that I have, and look at my wonderful life that I flex online. You know, that's how property is sold. It's not a new thing. It's just been done differently now, and property's always attracted this type of thing. But you know, just be careful who you get your advice from. Is all I would say. And if you get the majority of the information, we spoke about this. You know, Gen Zs and less so Gen Ys are absorbing or making a lot of their property investment decision making from what they see on social media. Have a look at the stuff that comes through your social media, and you can tell what's an ad and what's not an ad, and you will find more than likely that the content that you consume on your social media is all advertising paid for by someone who's a property investment advisor trying to sell something, because the social media platforms now know there's such a huge appetite for those type of adverts that they're not going to let people produce their content on there for free when they know they can take advertising from it. So you're probably not getting the real good stuff on your social media because it's unpaid for and therefore not promoted. The stuff you're getting is promoted stuff. So a lot of that, I'm not saying all of that, but a lot of that will be like that guy there's, you know, having a bit of a laugh at it. This playbook of, you know, fancy life, fancy flex probably could make a difference. And you know, there's a lot of people with their snouts in the trough sort of taking kickbacks all along the whole way. So buyer beware.
And you know
Buyer
what?
beware.
It's with that in tow, it goes back to where we started the podcast in terms of the manufactured cash flow. I've mentioned this a few times, but I think we, by necessity, going to have to go back to where SPI, Smart Property Investment, was, Phil, back in the magazine days, right? Back in the magazine days, you would have 7% PPOR loans. That was the standard rate back then. You know, when I look at my PPOR rate, it's still like 5.9 or something. It's quite competitive. There's still a long way to go from where it would be where it was about 10 years ago. And this is something I have mentioned on a few different podcasts, but I think we need to go back to where you and our mutual friend, Alex Whitlock, when you first started the like SPI portfolio and when you both went around to auctions together and you had your firm ceiling and you would not go $1,000 above that firm ceiling because you had a budget, and with that budget you had to be very particular about what you bought. And you hear it all the time now where people are used to that sugar rush, but also you hear about buyers agents not even viewing the houses. You're just buying a location for the sake of buying a location. We're now moving to a point where if we have 3 or 4 more interest rate rises, an extra % on the loan, your yields are not even going to come close to it. You're going to have to go back to being super strategic because $10,000 in the Australian property market now is, and this, what I'm about to say is maybe a little bit dismissive, but you know, when we're talking about house prices in Sydney now being almost just shy of an average of $2 million, $10,000, realistically, it's chump change. Now, that's not me. That just sounds dismissive, but realistically, in the scheme of things, 10 grand ain't doing much. But where 10 grand does do a lot is if you've got substantial yield compression, right? Where 10 grand on a purchase price means a lot is when interest rates go up by 1.5% in a year and a half. We're moving to a point where you need those solid ceilings. You cannot move above your solid ceiling. We're going to move to a point where you're going to have to identify those easy changes. And I think we're going to be going back to where SPI was 15 years ago, which is, and what we're doing now on Property Buzz, which is providing frank and fearless insights into the world of property.
Everything's changed, everything's different, but nothing is really that different. It's always all the same. It's just wrapped up a bit differently. But Liam, conscious of timing, mate, and I'm also sorry, apologies everyone about the quality of my video here. It's nowhere near the standard of Liam. So I'll be back in the studio certainly next week where we can get stuck in a whole bunch of different stuff on Property Buzz, Liam.
Awesome. Well, as Phil is overseas in New Zealand, we'll give him the rest of his day back. Thank you so much for joining me, Phil.
No worries. Thanks. Thanks for your time, mate.
Now, for all of our viewers, if you do want to get involved, shoot me an email, liam.garman, Garman, and not like the watch /GPS, Garman @momentummedia.com.au. If you want to reach out, we'd love to have a chat about all things property, real estate. Hey, and if I also said something egregiously wrong, something that you think is just so disagreeable, you can also send that to me as well. I'm pretty thick-skinned, so if you do disagree, reach out as well. But that is all we have time for today on Property Buzz, and we'll be back at the same time next week. But until then, bye-bye.